Kratos Defense. This is the KTOS stock analysis. Welcome, everybody. This is StockerFinance. I'm your host, David Scheuer. Twitter.com/StockerFinance for more information. The newsletter link will be below. It's a once-a-month newsletter. Check out the pinned comment or the description box below to subscribe to that. Going to be some good stuff. The first one just went out yesterday, actually. So Kratos is currently trading at around $33 a share as of making this video. As of the past 5 years, it's up nearly 1,000%, so an excellent return over the past 5 years, with a market cap of just over $4 billion. A massive PE ratio of 865, almost 866 there, a 52-week high of $33.26, and a 52-week low of $5. If we look at the year to date, we can tell that it's trading around that 52-week high, up about 25% this year, up significantly, though, from its 52-week low. If we go ahead and look at the one-month chart here, it's up about 10%, and over the past 5 days, it's up a nice 5%. Now, I'm going to go ahead and reference this article from Seeking Alpha. Definitely check out the title. I forget the author's name here, but he wrote a really good article here that made a lot of good points about this company for Kratos Defense and Security. So his summary here, he says Kratos has landed a very heavy belt of recent contracts. He said the company has a strong balance sheet and a strong backlog with a book-to-bill ratio of 1.8 times. We'll talk about that in a second here. First off, let's talk about what this company actually is. What is KTOS, or Kratos Defense and Security? What do they do? Well, they have an expertise in microwave electronics, cybersecurity, jet-powered unmanned aerial systems, so drones, and satellite communications. Since the start of last December, they've landed a flurry of large contracts across a wide range of defense and communication solutions. Meanwhile, the ARK Invest funds have been buying stock in KTOS, and this company is likely considered as a technology enabler for space exploration. That qualifies the company for inclusion into the upcoming ARK Space ETF, the ARKX. With a market cap of only $4 billion, Kratos also appears to be a very attractive M&A target because it operates in a defense and aerospace industry dominated by companies up to 25 times its size. Add it all up, and Kratos is a buy, according to this author. Now, this is a really interesting company. So they're obviously dealing with a lot of government contracts. They're not selling to your individual person. Maybe they might do a little bit of cybersecurity with individuals, but not much. They're really targeting big companies, government contracts, that sort of thing, especially just the federal contracts. That's what they're going after. And they do have a lot of competition with these big companies. But because they're a smaller company, you can kind of count them as a war dog in a sense, where they're picking up the smaller contracts that all these big dogs aren't going to be able to pick up. So they're picking up maybe a few drones here, or they need some cybersecurity there, whatever it might be. Whereas, Boeing or, Lockheed Martin, they're picking up we need 100 fighter jets or $1 billion order here. Kratos is not picking those type of orders up, but they're still getting a lot of orders because those other companies don't even want to deal with these smaller orders. That is what's really interesting about this company. But let's keep moving on here. So here's some of the orders. They have $37.7 million contract from the U.S. Air Force, $17.8 million contract from the U.S. Air Force as well. And some of these names are just awesome, by the way. I mean, U.S. Air Force for a Skyborg delivery, order 2 contract to integrate, test, and deliver XQ-58A Valkyrie aircraft. I'm sorry, but that's an awesome name. Anyways, let's move on here and keep checking out some of these orders here. $38.7 million contract from the U.S. Navy, $22 million order for satellite and communication systems products, hardware, and equipment. Does not say who from there. An $11 million development contract for Kratos Microwave Electronic Projects Division to support a next-generation satellite program, most likely also through the U.S. federal government. Now, let's go ahead and check out just a summary of their Q3 earnings report here. So they had some pretty strong report, actually some solid growth. They had revenue up 9.7% year over year to $202 million. Net income $2.4 million or 2 cents a share, which remained relatively flat. So not an immense amount of growth there. Most likely they need to improve on their margins since we're seeing the revenue growing by 9.7%, but their net income remaining flat. They definitely need to improve their margins or cut back on some of their expenses there if they want to improve that net income. Adjusted EBITDA of $24.6 million was up 20.6% year over year. CFO was at $8.3 million, and free cash flow was $600,000. Consolidated bookings in Q3 are $356.7 million for book-to-bill ratio of 1.8 times. And let's go talk about what a book-to-bill ratio is. This is something that I haven't really talked about on this channel too much. So book-to-bill ratio is also known as the BB ratio or BO/BI ratio. Book-to-bill ratio, whatever it is, just the different acronyms for it, is the ratio of orders received to the amount billed for a specific period, usually 1 month or 1 quarter. So if you have a 1.8 times a ratio like this company does, that means you have actually too much demand. Now that's a really good thing, but it also can be a bad thing from an investor's standpoint because are they having trouble filling that demand? Why is their book-to-bill ratio at 1.8 times? Now it's not crazy. It's not like 5 times or something like that. So I'm not too worried about it, but is something that should be taken into consideration. Let's keep moving on here. So again, they had a backlog of $873.1 million, up from $683.4 million in the previous quarter. That's awesome, but again, can they fill that backlog? How long is it going to take them to fill out that backlog? That's one thing I really want to know. So they also operate in two different segments. They have their unmanned systems, which I'm guessing is their drone segment, and then they have Kratos, which is most likely the cybersecurity, microwave electronics, etc. Now let's move on and look at some their net income and some numbers here. So if we go ahead and look at net income from 2019 to 3 months ended September 27th, 2020, it actually decreased by just 0.1 there. So not amazing, but it went from about 2.5 to 2.4. We go ahead and look at 9 months ended. It actually decreased pretty significantly as well, from 9.5 to 1.5. If we go ahead and look at adjusted EBITDA, we saw an increase, however, at least in the 3 months ended, from 20.4 to 24.6, just a small increase there. And if we go ahead and look at the 9 months ended, it decreased a tiny bit as well. So not amazing growth here as we saw previously. Maybe on a quarter-to-quarter basis, it's a little better, but on a year-to-year basis, it's not amazing, especially in terms of net income. In my opinion, they really just need to cut back on some of their expenses, and they just need to start filling out those orders. I think they have plenty of demand, but they need to be able to actually complete that demand and meet that demand. Is what I'm trying to say here. We see revenues, which have grown significantly from 45.7 in 2019 as of 3 months ended to 53.5 as of September 27th, 2020, 3 months ended. We look at the 9 months ended from 2019, 123 grew to 137 as of September 27th, 2020, 9 months ended there. So that's great. We see total revenues growing significantly as well. I don't know. It's looking good, but and that was just for the unmanned systems one, the one I was reading before. Kratos Government Solutions is significantly more as well. But if we go ahead and look at the total revenues, it's growing very nicely. But that doesn't matter too much if you can't actually make money. Yeah, you could make a ton of it. You can make billions of dollars in revenue. But if your margins are zero, well, you're not going to make any profit. You're going to be dealing with, you could even lose money from little expenses here and there. So they really need to cut back on their expenses and improve their bottom line in order to actually improve their net income. Because right now, if we go back here and we look at the net income of $2.4 million or 2 cents a share, well, that does not justify a $4 billion valuation whatsoever. The revenue looks amazing, but the net income is where the big issue is here. And so, especially when it's decreasing, especially on 9 months ended, there's a pretty significant decrease there. Now, perhaps they'll turn that around, perhaps I'm overlooking something, or perhaps they have some orders that they're going to fill very soon, and that'll drastically change it. Who knows? But let's keep moving on here. Go ahead and look at their balance sheet here. We can look at their current assets. So cash and cash equivalents, they actually grew it significantly, all from 172.6 million to 374.7 million. If we go ahead and look at just total assets at 1.4 billion, up significantly from 1.7 billion. Liabilities also up, but not nearly as much as current assets. So that's great. So current assets are growing significantly faster than that of current liabilities, exactly what you want to see there. If you look at stockholders' equity, we can tell that grew really immense growth there. So that's awesome for us as shareholders there. Gives us a lot of confidence in this company from growing from 574.1 million to 835.3 million in stockholders' equity. Again, that means that their assets are growing faster than their liabilities, which is really great and a sign of a healthy company. But again, I really wish, and I hope they can improve their net income and their bottom line there in terms of their margins, because that's really is what's hurting this company right now. Now let's look at the M&A here. So with a market cap of only $4 billion, KTOS looks to be ripe as a very attractive acquisition target for a number of large defense and aerospace companies. Boeing has a market cap of 123, Raytheon 110, LMT 95, all come to mind. Or Kratos could try to protect itself by merging with a company closer to its own size, perhaps Elbit Systems, ESLT, which has a market cap of 6.3. That would appear to be a particularly nice fit in order to gain scale and increase the global footprint. So I actually agree with this. I think this could be a very interesting acquisition target for someone like Boeing, because Boeing is dealing with all these massive order books, huge orders coming in. I could also see Lockheed Martin especially being interested in this company. And the reason they're going to be interested in this company is because this company is able to pick up the smaller contracts and deal with that and still be profitable. Whereas, if we're dealing with Lockheed Martin or Boeing or Raytheon, well, they really don't care about those small contracts. But owning a company that can deal with tons of those small contracts at a time, have a huge order book, will allow them to further monopolize these federal contracts. So I could definitely see that happening. It will also give them a massive advantage over the competitors who maybe can't fill out those smaller order books. Let's look at some transaction summaries here. And this is insider trading from the last 3 months and the last 6 months. If we look at the purchase and sales, you'll notice that the number of shares on the purchase side, at least over the last 3 months, significantly weighs the number of sales. Same with the last 6 months. So number of purchases for the last 3 months at 370,000 compared to 197,000 shares sold. Over the last 6 months, we see 450,000 shares purchased versus 339,000, almost 340,000 shares sold. That's a great sign for us investors because it shows that they're insider trading. Maybe they know something. Maybe something's going on in the future. Maybe they're getting some big orders going on. That's why so many shares are being purchased over the last 3 months. So that's a good sign that the insider trading appears to be on the bullish side. We also have some big names owning shares and being some of the top holders of this company. That includes BlackRock Inc. and Vanguard Group Inc. being the top 2 holders of this company. So that's a good sign for us investors that these big, baller companies, I guess, these big bag holders are holding shares in this company. I mean, BlackRock Inc. has over 9 million shares. Vanguard Group has over 8 million shares. And we have FMR LLC owning 7 million. And then it goes down to 4 and then the 3 millions. But still, the fact that they own so many shares gives us confidence in this company because obviously they're a for-profit company. They don't want to lose money on this investment. They have a lot of influence, a lot of other investments that maybe could help this one out. So that's going to give a slight advantage to this company with BlackRock and Vanguard Group being shareholders of this company and gives us investors some confidence in this company as well. So I really like this company. I'm not insane over. I'm not freaking out on this company and saying, oh, it's the best stock in the world or the best company in the world. I think it's really interesting. I need to do a lot more research into it, some more deep dive into industry that I don't exactly fully understand. But I thought that article was incredibly interesting. He did a really good analysis. I'll link the article below for people to check out and definitely should give that a read. It's really interesting. Perhaps this is a great growth stock. Perhaps it's overvalued. Perhaps it's undervalued intrinsically. Who knows? But this company is definitely interesting, and I look forward to seeing where it goes in the future and maybe doing a deeper analysis of this company if people want that and if there's demand for it on this channel. Anyways, guys, thanks for watching. Please subscribe, twitter.com/StockerFinance. Check out these videos as well. And the newsletter link will be below. The first one came out. It's really awesome. Definitely go ahead and subscribe to the newsletter. It's only a once-a-month email. Anyways, guys, I'll see you in the next video. Peace out.